Welcome everybody to our Wednesday webinar. We do this every Wednesday night at 6 p.m. Central. The goal of these webinars is for educational purposes. So our goal is to talk about a variety of topics, help everybody learn and understand. Questions are always welcome. Sometimes you put them in the chat, we'll answer them during the flow. If we miss them after we're all done presenting, we will bring everybody up and we're going to stay till we answer all of your questions. So life is very similar to an open book test. The question is, do we know where to go and look? So, awesome. So we're going to do a little bit. Oops. Back up one slide. Sorry, Mike. So tonight we'll talk a little bit about who Massive Capital is. We'll talk a little bit about our partnering opportunities. Then we're going to talk, this is number 1 of our GP series. So we're going to talk about the KP and deal sponsors for about 30 minutes. And then we should have about 20 minutes at the end for educational purposes. All right, disclaimer. This is an educational series. You need to have your own financial advice, legal advice, tax advice, any advice. What we're doing here is we're talking about what we believe and understand to be correct and right, but our goal is to provide an education to get you thinking, and then we'll answer some questions here. But always, before you make an investment, you should have your own professional guidance. All right, team is getting bigger and bigger and bigger. So on the left-hand side, we have the usual suspects that you know, Shirar, Sanjay, and Mike. They are the Massive Capital principals. And then we are merging with Realty One Capital. So you have Bo, Pat, and Axis, sorry. And then across the top, you have folks that you'll talk to more regularly, myself, Jasmine, Maria, Candace, and these are all the different teams. So you can see that we're growing. And one of the beautiful parts of this now is we're totally integrated. So we have construction, we have lease up for the new things that we're doing. So it gives us a lot more opportunities to be able to present more deals to the massive community. So a little bit about where we are. You can see that we're fairly Texas centric because we all live in Texas pretty much, but we do have deals in Denver, North Carolina, Georgia, and Florida, and we're working on some stuff in Phoenix. So some of the things that Massive Capital does is we have equity, we have brokerage, we have property management, and that's not on the the multifamily property management. That's on the retail, lifestyle, office type space. We do development, construction, education, and we obviously have events. I'm going to put a chat in here later. We have an event in Orlando, so anyone going to the Jake and Gino conference, we have a massive meetup on Friday night, so we hope everybody can come. Don't be afraid that it's Friday the 13th. It's actually a very lucky day because you're going to get to see me if you're there. I'm only kidding. You're actually going to get to see Maria. So, and on the other side, we have LP equity, institutional. We do acquisitions, leasing, retail flex space, just retail, town centers, multifamily, and as I mentioned before, we have in-house general contracting. So really excited about the growth that we're seeing at Massive Capital. Gives us a lot of variety. So on the left-hand side, you can see our current deals. So if we go down, starting from the bottom, we closed new land development, Amberwood Apartments, Warner Robins, X Space, which we're going to start building by the end of this year. We closed on an asset in Denver. We have a couple of retail locations. We're working on a value add, which we're going to start out as a 506B in San Antonio. We currently do have a great opportunity here in Austin, and we do have a webinar tomorrow night, so we'll talk a little bit about that. Hope you can join us if you're interested. And then we're working on a value add in North Carolina. So we currently have 7 deals under contract down at the bottom. We've signed for 4 recourse loans, local regional banks. So a lot of things happening. Very exciting. If you add up massive capital along with Realty One, we're getting close to that $500 million mark. I never thought in all of my life when I started doing real estate investing, I'd be one of the guys that even came close to saying the M word, let alone the B word. So it's super exciting. We're involved in land development, building construction, building operations, building renovations. Currently right now, 1,346 apartment units, 107,000 square feet of retail centers. We have 3,242 resale centers and X space for a total of about 1,500 square feet of commercial real estate. It's pretty exciting.
Thank you, Trevor. Let's see, I think there's one. Yeah.
This is the exciting stuff coming up. So we have our second virtual conference. It's going to be held on November 3rd. We've already got the post in the chat. Brenda is on the ball posting the chat. Oh,
sorry, go ahead.
Where you can register for that. We also have one coming up in February. This is going to be our first in-person event. It's going to be held in Dallas, very close to Valentine's. So bring your loved ones. And if you don't have some loved ones, we'll give you a big hug when you get there. But it's going to be very exciting for us to be able to host our first in-person event. Super excited. Those that came to our last virtual conference, the feedback was very, very positive, but we decided to put it into one day instead of 2 days because we really wanted to be able to have people join. It's a little bit hard when it's on a Friday. So this is on a Saturday. We hope that you can join us. You can also register for a VIP, which gives you access to all of the recordings. Highly recommend that you do that. Well, we get someone from Toronto, Canada. We're getting more Canadians in this group. For those that don't know, I'm originally from Niagara Falls, Canada. So it's been super excited to connect with so many Canadians. I'm the token Canadian. That's right. I still say A and out and about.
Sorry, Trevor. I couldn't
right.
resist.
Awesome.
I was in the middle of writing that when you said that. So. Sorry.
So here are all of the verticals that we're involved in. So on the left-hand side, obviously the new construction. So we want to partner with landowners. So if you have a piece of land in an A-class location on the pathway to development, we want to partner with you. We want you to bring the land to the deal. We'll figure out the best use for it. And again, now that we're vertically integrated with Realty One partners, we can really bring some serious value on the new construction development. We also going to talk a little bit more about this, but number 3, we'll partner with people to bring the balance sheet, the liquidity, things that are needed to be able to get the loans done. So in the middle, we're obviously still very much involved in the multifamily space. It's where we came from. As I mentioned before, we have about 1,500 units under management right now, and we're about to add to that in the next few weeks. So we co-sponsor on a lot of projects. So again, many of our projects, we have partners. And the reason we have partners is we need local expertise and local boots on the ground. So when you're looking at our deals in North Carolina, Denver, the reason those make sense is the strength of our local partners. It's always something that you want to be able to have. You want somebody who knows the market, boots on the ground. So again, those things. And then education, I'm going to put a link in the chat if you're interested in education. I'm very excited that Brenda has now joined our team, and she's going to be helping us with the education program, just helping get people introduced to it. So we have several paths from capital raising, understanding more, and our full one is right through the path to GP status. Our goal is to have the students in that program become general partners in deals within the year of their membership. It's an awesome program.
Thank you, Trevor. Okay.
All right.
I'll pick up if you're good. Thank you, Trevor. I had to do that last week all on my own.
I know, I
Missed you.
heard that.
So that was awesome. I appreciate it, and great to be here. This is, as Trevor said, our first in a series of discussions on GP teams, and the different roles. And we're starting with KP tonight. We'll be talking later about asset management. We'll be talking about contract close and who needs to be there, deal finding, acquisitions, and capital raising it as well somewhere in there. So this, so we'll get started. And really part of the initiation of this is building a syndication team, right? So you can do deals without a syndication team, but many of us are really in the process of building the syndication teams, and more or less really what I think of as building the team around us that we need, right? So when you start to put your team together, you got to think through your goals, how you're going to build the team out, who needs to be in there, and we're going to go into a slide next on what does that team kind of need to look like. And when you need to be aligned on the goals, and the goals are not just how much you can grow, but the goals are also what think into the goal or building the team is also like who has the resource and time, the resource and liquidity, or the resource and net worth, and how you guys are all going to complement each other as you're building that team out. The process building your network of investors, right? That's the whole thing. The finding a deal, doing the deals, you still are going to have to get equity into it. So we'll get senior debt, and we're going to talk about being a KP a little bit later today, but we'll be getting senior debt on these, maybe even a supplemental loan, going through one of those right now. The thing is, after you have those, you're still going to have a gap to close the total value. Maybe it could be anywhere from 30 to 50% of the total value of the deal. So, you may be raising, on a $10 million deal, you may be raising still $4 to $5 million of equity. So you need to build your network of investors early. Get started doing that now. And one of the things I want to throw in there on this, and we'll talk more about this a lot, but when you're thinking about your investors, think about who your current, who's in your current circle, people you already do deals with, people you are in business with, people you work with. Everybody is most like an investor, and some of us don't want to deal with get into the family issues, but I've found a lot of family that are really interested in this, and maybe they don't invest with me, or maybe they invest, but it's helping people learn and teach about that process as well. Then the team needs to begin the process of sourcing deals. One of the cool things, I know a lot of teams, a good way to start, and a lot of teams do, is they build out how they're going to source deals, and then they underwrite them together, and they come out, together once a week, and they go through the underwriting, talk about them, and that's a great way to work and learn together in the early part. Find your market, right? Okay, maybe to me, I thought, okay, let me look all over, and I started looking everywhere. And then I got focused more into Texas, where I'm based, in Houston. And, through discussions with like Shariers, like, there's $7 billion of multifamily in Texas. I don't really have to go too far to find a deal. And I can take like 1% of that. That's okay. That's enough for me, to have some deals. So start local. If you don't have a great market you like, okay, look somewhere else. But you don't need to look in 1,000 markets. Get to know a market really well. And we'll talk more on that in the future as well. So I'm going to just do a quick high-level piece on what a KP guarantor is. I'm going to do a bit, and then I'm going to pause, let Schreier share, Trevor share as well. You know, but one of the things about a loan on multifamily or commercial real estate is really the borrower is not the person. The borrower is the property. And the borrower is usually, you know, an entity around that. And the person that is the guarantor is the individual. And that individual can be a guarantor or becomes even the bigger piece as a KP, a key principal. And these are a lot of terms that Fannie Mae, Freddie Mac, Arbor, you know, the lenders, other lenders will be using as you go through the process. And I'm going to go through.
Oh, she's fuck.
I got it. And I go through the process here, and we'll talk about a little on recourse versus non-recourse and what that really means and how it affects. There's certain pieces that it affects about your sort of part of it is your lending capacity and your balance sheet and things, as well as there's little carve outs and things. But one of the key parts at the very end of here is that the basically the KP is looking. They're going to be looking for people that have experience and financial capacity to do the deals. And we got a few more slides to go into details on those in a minute here. Schreier, do you want to share a little bit here as I pause or as I go to some of the other slides for Trevor?
Yeah. Trevor, you want to go? Then I can go. That's fine.
So you go ahead.
Yeah. So one of the thing is what I would say, since we're talking about the KP, I would like to add a little bit more framework to it, right? And the folks who know me, it's about the approach and the methodology of going about doing it. A couple of things as you build your team, have a little bit long-term view. And you know, at the beginning when I started, one of my good friends used to tell me, look, Shraz, you're gonna run out of something someday. That someday could be tomorrow. So build your team who can bottleneck you, who can de-bottleneck you. And second thing, he always mentioned that the best guy you find today will be the guy who's gonna drag you down tomorrow if you don't do the right fit. What I meant to say is that when we get into, you know, doing things, we reach out to someone who we think the best of or know of and kind of jives well with us, right? That's one way of going about it. That's the typical way going about it. And you should add a layer to it that, look, can I do 3 deals together side by side at the same time within a year with the same team or not? Do they have time? Do they have resource? Do they have everything else on it? So on that note, as you're building your team, test that 3X rule, that can I do 3 deals for the whatever price that I'm buying with the team? Would they have the balance sheets, the liquidity, and the know-how? And what is not talked about, the time commitment to run a deal. So that's where you should test. And you know, and that's always the good way to go when you sign up for the KP. And then one thing I would like to touch is the recourse versus non-recourse, right? From the finance side of it, to me, they're all the same. The end outcome is the same, which is not the good side, that's the bad side. If the deal were to go bad, the end result is the same, both for the recourse and non-recourse. We'll be out of the game for a while. It's a big black eye, and then you have to fight through it. And depending on how big is the loan, bank is going to come after you, right? So when you sign in on a KP, make sure the team is there the right way. On the other side, you know, the folks who are typically not do a lot of deals, not quite aligned, or you know, not aligned, I should say, a little more extra risk, they're okay with signing a non-recourse. And folks who are comfortable with signing a recourse, they tend to be more deeper into the deal. So test that whenever you build a team. Are they okay to sign recourse and non-recourse or not? That's a good way to kind of test it. It's not end all be all. It's a good way to test it. So those are the 2 things I would say. Have a long-term view and run a scenario. Can you do 3 deals with the same team or not? And test for the time, the liquidity, and the balance sheets. And for the recourse and non-recourse, the end outcome is the same. The difference is with the recourse, though, hypothetically, someone has a $20 million balance sheet. With the recourse, they can buy maybe $40–50 million worth of assets. But with the non-recourse, they can go up to $100 million. So recourse and non-recourse allow us to buy more assets, but the downside is the more or less the same thing. So those are the 2 things. So team matters, pick your team very wisely. As Massive, we call it, we build the team on skill sets, and relationship will come afterwards. Not the relationship first and then the skill sets. Back to you, Mike.
Yeah, so it's definitely, and it's really an important factor. A lot of people don't quite understand, so what's involved in being a key principal, right? So you clearly need the total net worth. You need the liquidity, which is things that a lot of people don't have. And then, and are you going through those points, Mike?
Yeah, I'm gonna get to them for you, Trevor, for sure.
Okay. Yeah. So most important though is the team, right? And
so I'm gonna go back to the team.
Yeah, you go ahead.
That's where I thought you're. Yeah. You went all the way. No, this one. This is where I was thinking, Trevor, because this is really where you're going to build your team. But go ahead.
Yeah, no, I was just going to say, so it's very important, but you want to make sure that you're not just looking for somebody that has financial means to be able to sign on a loan. You want a partner that can help you more than one time, wants to have a long-term relationship with you. Anybody who knows anything about the commercial real estate space, that it is a team sport. So you want to build those relationships, you want to build it around skill sets. And then, it was always easy to be a KP. And I think in this next coming year, it's not going to be as easy. In the world of foreclosure, even though it's a non-recourse in some of those debts, no matter what, that does go on your record. So you need to be sure, even though you're not personally held liable for it, your future is definitely jeopardized by having a repossession or a foreclosure on your record. So again, be super careful when asking somebody to do this for you. And then if you're the person who can do this, obviously be very careful who you partner with.
Yeah. And then we'll have, I'm going to talk to this side a little. Great, Trevor. Thank you. I'll talk to this side a little bit here. And then I'm going to go back into the KP into a little more details on common requirements, the typical things around net worth and liquidity, as well as experience. So we have a few slides on those, and the idea is we're going to share what the common ground is, but the idea is we'll talk more about what's been our experience recently. And as we go through, so this is an area, which is part of the team. So this, when I think of a team, this is the team of what you need when you're doing a deal, which is really asset management, equity investor relations, loan guarantor, people that will do your at-risk capital, and your deal sourcing process. So you can look at these different spots in here and think about these as your team as you go through a deal and, work on that process. So here is some of I have these slides here wanted to talk on, which is more of the common requirements and that are expected, but these are at the high level. And it's some of these, it's like, hey, you're loaning on this asset, why do you need to check my credit? And they still want to verify, that there's a piece of due diligence still on the guarantor, even though the loan is typically for the asset, and that it's a business loan, and the understanding is the business pays for that. But when they look at things such as this financial qualifications, they're also wanting to see that you have, or that the KP, the team, has the capacity in case, something doesn't go right with the deal, that you have the capacity to cover some potential shortfalls in a short-term or mid-term period. So they're usually looking at how much, a 6 months, possibly even a year of coverage of liquidity, at least on the debt side of things, probably not on the full expense, but there's some, ratios and things that'll be used around that. And if you think about it, we're buying or owning, operating 20, 30, 40, 50, 60 million dollar businesses at a time. So it's not like I'm just buying a house out there and operating it as, you know, a single family house. I'm buying a business. And, you know, when something doesn't quite go right with that business, and the bigger that is, the business of 60 million or $100 million business, a small change or small issue on a, you know, 1% on something can make a huge shift where you're needing to put in a couple hundred, 300, 400,000, you know, in a month, and being able to do that in a short term. So those are some of the key things that they're going to be looking for in your KPs. And as you go through it, they'll typically, you know, look that they've, you know, they may even, like, so we talked recourse, non-recourse. They may ask for a personal guarantee as well, which is really coming back to a recourse debt versus a non-recourse. So this is a little bit of the common requirements. Oops. Do you want to, Schreier, you want to jump in there a bit?
Yes, can you hear me? I mean, this is better. I'm not
Yes.
sure.
Yeah, it's better.
Okay, good. Sorry, my headset's been acting all day today. I went to my Shell headset. Haven't used that for a while. So on the KP, the way we take a look at it, it's the LP investors that get you into that and a whole sequence of it, how the multifamily works and that. And then before someone takes the full jump onto the operations, which is the asset management and or capital side of it, in between it's the KP. This is a very important kind of factor to it. And it's what we don't talk, I mean, what it's not here, but that implies that it needs a certain kind of resume to be an operator, to get a certain type of loans, to open certain type of doors, to open certain kind of conversation even. And KP is the bridge to get to it, right? And so this is a nicer bridge to get into it. Let's say now, and if I would be a W-2 and I am looking for transition and I would like to be more active, there are lots of different ways to fry the fish. But if I see myself further down the way, hey, I don't know what the asset management will look like, but I want to get a pulse of it. I want to hang out with the asset management team much closer to it. Then I could, play with my strength and then become a KP. Then I come inside the door. So what interesting part here is that on the LP side, that's like I should say, software way coming into the deal. It is active, but not so active. You got to underwrite the team, you got to underwrite the deal, you got to go through an education, the learning curve. And once you get to the learning curve, you kind of sort of understand it works, you're ready to go and do it. That is dramatically different than when you come into the ownership part of it. Because for us, we don't buy assets, we buy companies, and we buy those companies, own it for 5 years, and we fix the operation and we go. And that day-to-day operations is tough, right? Just think about, we have a job, right? We have, let's say McCollum, it's a $60 million asset. It's a $60 million company. So your C-level team, if you think about it, has to be a certain set of skill set to run a $60 million asset, and they have to dedicate a certain amount of time. And hanging out with those C-level team, what the day-to-day operation happens, and how the P&L works out, how to negotiate with the lender, how to negotiate with the attorneys, and sometimes guide the attorneys, sometimes take a different position than the lender or anybody else. Those kind of learning doesn't happen on the YouTube University. It happens when you really do it, when you see somebody else doing it. And KP, that triggers that openness that puts you really close to it, right? And so that's one of the interesting part that we sometimes often don't talk about, but how important it is to be closer or be inside the ring fence and then get into that, the day-to-day grind of it. Because it's different, right? Just like any other work that we have, a manager will do different level than a C-level team of the different level. And that level has a different breadth, different view, different network. When someone, I'm an investor of a 10,000 units, that's one thing. And then I am a KP of 5,000 units, that's another thing. And I'm a general partner of 1,000 units, that's another thing. But this is a KP is a very nice way coming into the game without doing much of the work. Because KP, it's an interesting way of watching the game within the team, being in the team, but not really actively playing, right? So that's interesting part about the KP. So folks who has, whoever has something else working, like you spend 40 to 60 hours to whatever that you do today, and you don't have enough of a time to manage, big deals, but you can come into the deal from the KP, and then watch the game, watch the play, watch the players. And I know, some people they become KP, then they said, hell no, I love my being LP. And I know some of the friends, and they said, hell yes, I want to be all the way. So KP is a very nice bridge to walk across and come onto the other side, then decide what the long-term play could look like.
Yeah, one of the things, once I discovered what a KP was and what they did, that's my retirement plan. I want to build up my net worth. I want to build up my experience. I want to get connected with lots of people. And then I want to be able to help them go get their deals and then mentor them and then get a piece of the deal, leveraging it. And it's quite powerful, especially on non-recourse. What a lot of people don't understand, let's say I have a net worth of $10 million and I'm signing in $1 million liquid. I can actually, not like single family world land, I can sign on multiple $10 million loans simultaneously and get pieces of lots of deals. And to me, that was always my end retirement plan to be a KP, to mentor some people doing a deal, and then, provide my experience, my balance sheet, and still be able to play in the game without being the active participant on the GP team.
And I was going to say as well, thanks guys. And, we've had a few people that have been KPs for us as we got started, and some of them come from other communities, from some of us are part of the Big Dog community, and Paul Sink has been a KP for us on some deals and has supported us on some other opportunities, as well as Ash Shaw, many of you may know. So, it's something that you kind of got to use your networks as well to find, the ones, because it's not just that, hey, I want to sign up anybody to be KP with me, and you want to get to know them just as you do anyone else on your team.
The interesting part about KPs is typically, they solve one gap right there for that deal, but also they bring a lot of wisdom, right? The veteran KPs per se, like if you want to go back one more slide. So they typically, once you're a KP for a bunch of other stuff. So you do a lot of work. And when we reach out to folks like we have Ethan here, we have Ash, and we have us, right? Once you go through 10, 15, 20 deals, you kind of sort of know what good looks like, what bad looks like, right? It's almost like, I'll say it again, when I'm freshman coming out the house, going to college, or I'm getting a job for the first time, everything is lovey-dovey, right? I love everything about the company. 3, 4 years down the way, when you ask for a promotion or thing doesn't go your way, you got to burn. 5 years, 10 years down the way, you really know where the company is, then you really know which way to swing it, good, bad, or ugly. KP is a good chunk of our KPs. They bring that wisdom for us. And it's the same thing when we go get in, we provide that feedback as well. So not only solve a scenario right there, but also opens up the wisdom part of it. That's right there, because they have quite a bit of experience, right? Most of the KPs that we work with, we go to them for wisdom, right? Solution plus a wisdom. And we have a handful of other KPs that we're bringing them into that track and kind of, go forward with it. So over time, they can add the wisdom on top of that, whatever that we do day to day. Because, we need advisors, right? KPs are your advisors. When you get into trouble or you don't know what it is, depending on the KPs that you have, you can pick up a phone call and then they can they can give you their thoughts on it. Sometimes those 5 minutes phone call more important than, those 5 minutes phone call will save a lot of money and a lot of headache.
Yeah, 100%. And I jumped to this slide, Shar, because I think it talked more to that experience piece, that they've got the ownership experience, industry experience, and everything.
Yes.
100%.
So I can talk a little bit size and complexity, right? It is important, right? We have KPs, and I'll give you one of our scenarios. So within our massive team, we can, I know, we can be KP now after 2 years into it. But again, we had a loan where the loan was a small balance loan. The loan was too small to get it for us because we didn't have the ownership. We didn't fit into the definition. Liquidity checked out, balance sheets checked out, everything checked out, but we did not own that type of loan before. And then we called one of our friend, and he came in and he picked it up. And then, he did he ask about the deal? Yes. Did he saw it on the deal? No. That's because Massive mentioned, hey, this is a good deal for you. Come pick it up. And we think it's as good as for us. Why don't you go? On the flip side, we looked at some of the deals. They're $250 million, $110 million. Those are $50 million. Those are new for us, if you ask me. We have done a $60 million deal. We have done quite a bit of $35 million deals in the pipeline, but not a $100 million deal, right? So whole game is if you get one of those KPs, it checks all the boxes. We have the team and structures and the balance sheet, liquidity, we can get there. But having someone who has the 100 million times 10, 20, and who has done those deals before, and they're on your side as an advisor, and that is the money typically cannot buy, right? That's why the size and complexity matters. And then the ownership, of course, matters. They know a lot of people. We have some of the KPs, one phone call, which property management company, which general partner, who is good, who's bad, and who's going down, who's coming up. One phone call, you get it. It's a small, network. And then the last one is the business plan and the management team. If you do 20 deals, you will have some dog assets, and you'll have some supplements, and you'll have everything in between. And the KPs bring those expertise and the small nuggets with the management team as well. So KPs add a lot of value. If we partner with the right KP, they add tremendous value. And if you just solve for that solution for one property, and the one guy with $1 million, $2 million liquidity, or one girl, and that is it, then you'll be shooting on your foot. Because then number two, you'll get into same issue, and you'll get then what happens if you stack 3 deals and 2 go sideways, you don't know who to call. And if we look at purely on the transactional point and bring the KPs, to me it's a short sighting. But if we bring the right KPs by making them happy and making them really part of your team, it goes a long way.
Awesome, thank you. So there are a couple of questions in the chat too. So
and this was the last slide.
Okay, you go ahead.
But go ahead to the questions, Trevor. I just
so Daniel had asked about investing outside the US, and Massive Capital is very US centric. We stick to countries that we know, live in, work in. So Massive Capital itself is not looking outside of the USA. There's lots of opportunities.
Just to add, outside, so just from the finance perspective, we buy risk. So country itself has a risk. US is the #1 economy. Love it or hate it, we are #1. And the world runs on the US dollar. Whatever argument that you have, fine. But US dollar and US economy, we're betting on that. Just because I showed up, I'm from Bangladesh, I'm friends from India, just because I went to India, I get 10 times more return. But hell, good luck getting that dollar, that Indian rupee, and convert it into US dollar, get the money. So you have to think about the country risk, you have to think about the political risk, you have to think about the transaction risk, then you have to look at the return. So another way, if you invest $100 in US and you make 7%, you got to make 20, 30, 40, 50%. And if you invest outside the US. So don't get into it just because return is good unless you understand, unless you are in the thick of in the local area, right? Don't get into it. It's just too much of a risk. And at the end of the day, we all should invest in dollars, and we should always pick the best economies there. So it's not our field, it's just the way it works. Like I used to work at Shell, we had upstream portfolio, we have assets in Mexico, Venezuela, a bunch of other countries. At the end of the day, if the political party moves, you're done. What are you going to do with the return? Money stuck in that country. That's always the issue. And then the last thing is within the dollar of the country, that devalues at a different way, right? My dollar goes up. 2%, 3%, 4%, whatever. If you have any other country, the country typically, based on the inflation, they synthetically peg it, right? And then you have to convert that. And that's a bigger issue. So in general, unless you are in that country, you are thick of it, you are way in the 1%er, you know everything about everything, don't touch it. Invest in US dollars.
Yeah. And
Sorry.
then, no problem. I know. And then there was another question about creating GPs. And this is really one of Massive's goals as part of our education program, right? So we want to provide value, we want to provide education, but we also want to create GPs. We want to help people realize their journey. I should know the number, Mike, how many we've created this year so far. Somewhere somebody should be counting them, but I know we've created quite a few. Mostly they join our deals through our mentoring program, and they help with investor relations and raising of capital, doing different things. But there are lots of ways to become a GP by partnering in with Massive Capital.
Last year we did what, 19 GPs for the first time. This year almost double digits, right, Mike?
Yeah, it's we're into in a year and a half or so, we're into the around 40 or so probably.
Yeah, so it's very exciting to be able to do that. And there was another question here: how do you know?
And put in the chat, or we'll talk later, but put in the chat if that answered your question or not. Okay. And how we do that. And part of how we also do that is kind of via the education program, mentoring program that Trevor talked about earlier, which is, the content we have available, the support, and the path, we call it a pathway to GP, basically pathway to partnership. So.
And there was another question: how do you determine if you need a KP? So the bank, let's say you're getting a $5 million loan, you're going to need a $5 million net worth and a $500,000 liquidity. So if you don't have that between your team that's doing it, you're going to need to find somebody who has it. But on top of that, more than the money is the experience. So when a lender looks at somebody to say, I'm going to give you money, first of all, they want to know, do you have enough money? Who are you? Do you have enough money? Do you have money liquid, which is something that a lot of people don't carry a lot of because they like to keep their money moving. And the bank is going to look for one substantial person within a group. They would not be very happy to have 5 people worth $1 million. It's just not, they have to chase too many people. So they look for someone that has a little bit bigger pockets, a little bit bigger cash reserves to be able to sign on the loan. So it's a banking requirement, and that's traditionally what it is. They require at least the net worth and the liquidity.
Yeah, and I would, I'll jump in first, Shire, or let you go next. Then so 100% what Trevor shared, and as you look at it, the other piece is, okay, you could maybe do the loan, and a lot of them will work with you, and like you could have 4 people signing on the debt, and culminating that net worth and liquidity somehow together, and a lot they'll work with you on that. One of the things to think about though is the work. So there's the upfront work, and then there's the continued work. So once you do that and you're into that, everybody has to maintain all of their financial records. Everybody's got to be, on top of everything. So the less it comes into some of that, less cooks in the kitchen type of thought process also. So the least people you can do it with, especially, and then Schreier can jump in, especially when you get into like recourse and such, and how they're counting your dollars against you. So that's a piece that I wanted to share.
Michael, just to build up on top of that, right? again, if you think about multifamily or investing is as a business, what happens? We're not here to buy one deals, especially if you're thinking about GPs and KPs. You are not gonna do one deal. I can guarantee it almost, right? You're gonna do many deals. So why don't you start with that, right? For Massive, the way we operate, we have a business plan. So I'll give an example. Let's say 2024, we are already creating a business plan. No, let's start with 2023. In 2023, our business plan was to buy $150 million worth of assets in multifamily sector. That's how we started our 2023. So with the 2023, I mean, if it's 150, then we need a team that has at least $200 million of net worth, and or they can buy up to $200 million of net worth. 1/4 ratio. We needed our team needed a balance sheet partner or combined together at least $50 million net worth. So we built a team coming into 2023 that has around, I think, $100 million worth of balance sheet. So start with that. Don't look at one deal. Look at the year, how many we're going to do. And then we said, okay, we have to raise about $50 million. We said, do I have a team that can get us to that point? And chances are we all don't. Then we went back and we brought in the right set of people we put into this shoulder. Did we need them for doing the deal number one and a year one and a year two? The answer is no. But as a primer to throughout the year, we brought them in anyways. So in other way, if you go in with the thinking, I can do everything by myself, you're gonna run out of something, deal number 2 and 3. But if you go at it and say, you know what, I'm going to need all the help I need because I'm going to go for deal number 3, 4, and 5. Let's build the team on a deal 1 and a 2, then kind of go about it. So that's how typically we go after our KPs and our partners when we go. Then from there, we take a look at what type of assets that we buy and who has what expertise. Some and us massive partners, we sign non-recourse loans or recourse loan depending on the deal for certain set of teams, and for certain set we will not. And some of our KPs are the same, just like us. They will sign non-recourse for certain type of deals, and they're okay with the non-recourse all the way. So you have to manage them at a yearly basis, plan for it, then you bring the KP. Last thing I'll leave you with, as all of us, we work outside, or we did work in the corporate side, life is a pyramid. We start with everybody else, then we fight our way through. But in real estate, it's the other way around. The longer you stay lonely, it's gonna take even long amount of time to go move up in the the real estate hierarchy. And the faster you used to let go and bring people in, right people, and testing it out, the more you're gonna go. Back to you, Mike.
No, that's great. And I was just, the last thing I wanted to share, and this is just for everyone. If you haven't started this is something you need to start doing. Building out your profile, your SREO and your PFS, even if you've got 1, 2, 3, 4, 5 houses, just you've invested as an LP in some deals, start adding them into building out. If you're really wanting to continue, whether you want to be a KP or guarantor or just doing deals, it'll be useful to build your bio, which are these tools are part of the bio for the brokers, the lenders, and other people that you, and even partners that you may be working with, and get comfortable being uncomfortable, sharing this type of data with people eventually, right? And just wanted to, kind of put this out there for everyone to think about. Start building out your profile, which is kind of the piece on the right. Build out your PFS. I put because I just had like a bunch of single families and LPs, so I just had added everything to my profile and stuff. And now it's got other things, so I can kind of start to balance to what I put in there. But just begin that process. And then the schedule of real estate owned is this table up here at the top on the left, that shows what do you own. And this is where the banks will look at they're going to look at the occupancy, NOI value, the personal values, but they also then look at the loan amounts And they're gonna look, is it the type of loan that is as well? And they're gonna determine your liquidity, or not your liquidity, but your net worth and your, how much they'll, look at you for loans and such based on that. And then I just have a simple PFS. There's very complicated PFS sheets. Most of the banks all have their own. Ask your lender for a blank one if you don't have one. They'll give you a nice form. You can start filling it out. So that was the last thing that I had really around KP. I started what you call a poll. If y'all would take a chance and answer the poll as well, I'd appreciate it. Just like to collect, understand who we're with and who's joining us, and what kind of things you're interested in the future. So you may have seen this one before. We'll be having some new ones in the future, but still trying to understand, who our audience is. So I appreciate you guys just take a minute real quick and answer the poll. Would really be appreciated. Here on the screen again is our multifamily movement on November 3rd. If you scan that QR code, it should take you straight to the sign up page. I know we put it in the chat before, but this also will take you right there. Sign up, general admission. We've discounted it to a free ticket, and the VIP we've discounted that to $99. So I'd love to have y'all. We had over 500 people sign up for our first one. Went off like a blast, was awesome. So love to have you guys, more of y'all, join us for this. We're gonna do one day. It's gonna be interesting. It's gonna go almost 12 hours total. So we're gonna go from about 8 a.m. to 8:30 a.m. or so till 8:30 p.m. I think, something like that. So it's gonna be a full day. There's gonna be a lot of networking. We're going to have some breakout rooms, just a lot of different opportunities to meet people and connect. We'll have a VIP lounge. We're going to have sponsors. We actually visit the sponsor booths and get to meet them. So some really cool stuff will be happening there.
I think we need massive coffee for that day.
Massive
You want to get the
coffee.
videos.
One
Massive.
question in the chat was how Massive formed. I know how I got into Massive, but I've never really heard how the three of you actually became Massive. I can talk about why I joined later, and then there was a question: what makes us different than any other syndicator group? That's another question too. So
I'll take the first and the second one, the last one. Then we can talk a little bit about the story. The couple of major differences. First, we're not a syndicating company. A syndicating team. We are a company. If I get hit by a bus, life will move on. I got Mike, I got Sanjay, we got a whole back office, we got team. We're building a company, right? We have 36 people, and about 29 of them are paid employees. So that's a difference, right? And then if you look at a syndicating team, look at the asset manager, and then you send the asset manager to Moon for 6 months, and you ask the question, how will my assets or my investments will perform? You'll see there's a dramatic shift, right? So that's one. And that's the major difference. We're running a company. We're going to grow the company. Our goal or mandate is to become a REIT quality company in about 2 to 3 years. And we play with our skill set. And we are building our skill set as we go, right? That's the major difference, and everything else kind of falls out. So we started as just like everybody else. Then we kind of went to the corporate side. And that's also how we started. When I have 2 companies, Massive, and I invested in a residential company as well. That's where I started. On the residential company, think about last 4.5 years or so, I bought over 230 properties in Houston. And definition of scale, at least a small definition of scale was there. But then when I was trying to move into multifamily, the whole world and whole idea was that we want to build something that can run without us, right? The definition of business is you can sell your business minus you for a profit, then you have a business. Otherwise, you don't have a business. Otherwise, you have a job. It's just a high-paying job, right? So when we started or when we're thinking about building something, The whole idea was that, what do we build? So we started by saying that, hey, we're going to build a company that's going to take $500 million. It just sounds cool, right? We want $500 million. Then we asked the question, okay, do we have a team that can run a $500 million company, or they have done it on paper? So we came up with some definition by saying that somebody has to run on the corporate side for at least $1 billion P&L. Call us crazy, right? So that was our rule, that, hey, we're gonna go hunt down some people. That then secondary rule was, somebody gotta be successful into the real estate domain. What was the success definition? You have to be able to say, I've been there, done that, way beyond the others, right? Just like at 30 homes, if someone has 30 houses, I call you successful, right? Or someone flipped and 5 or 6 apartments, then you're successful. And or you're coming in very tactical way you're going about it. So we started looking at folks from that end. Sanjay, I heard about him. He was a right-hand man for one of the big guys and a big dog organization. I heard about him quite a bit with a common friend, Ajit. And I knew he had a family event. He took a year off and he was coming back. So Ajit was my partner for all of my commercial assets. He introduced me to Sanjay. And then Mike, we heard about him. He's the up and coming guy. He's doing it, ConocoPhillips, awesome, subsurface engineer, retired. He's just coming. And he owns like bazillion houses somewhere else. He owns ranches. He's buying deals. I was like, we got to meet that guy. So that's how. And then I was the underdog, right? And we go walk in our first deal. We looked at, it was a $19 million deal in LaPorte. And it was interesting. I go there at 9 o'clock. Sanjay comes from Dallas at 8:30 a.m. in the morning. So he gets there before me. I'm like totally impressed. But how the hell do you get from Dallas to Houston before me, and I live in Katy, get to, LaPorte? Here comes Mike, nice shoes, Mike, all of that. That guy's pretty cool. So we go for lunch. Look, I was struggling to make $3, $4, $5 million offers, right? From residential, get to the commercial. And then Ajit, Sanjay, Mike sits down, eating lunch. And those guys are swinging bats. And in, 20, 30 minutes, they came up with an offer, $19 million. I was like, what the hell is wrong with those guys? And I don't know anything, but I want to hang out with those team. And that's the first time we have done a deal together. And then Pasadena was the first deal that we bought, and it kind of worked out. So that's our story coming together. But on that side, we are very, again, we're very critical about relationships. You have to go through the vetting process. So each of us, we tested each other's out to make sure we have the right skill set, complementary skill set, but we have the same vision. And we like the style of each other's, right? My personality is different than mine. I'm somewhat different than Sanjay and the team, but we can play off of each other pretty nicely. And so that's how we started.
And the other piece is, the Shariah, the one thing it may,
Maybe stop sharing, Mike, because that has the wrong date anyways. Come tomorrow, don't come September 28th.
Oh, I got the old one.
But maybe
the information is all correct.
It is,
Trevor, other than the date.
Yeah.
And if you sign up or go to the deal, you'll find out some more information. But yeah, sorry about that. That was the last. So
yeah.
Oh, and I forgot to put the new meeting for next week. I was going to say that we'll also come back. Cataract will answer your questions still, and some of these others. The one thing though I would say is, I was going to say about Shariah also was that he would not, like, he's really the one that made Massive happen, because when the first deal didn't happen, he was convinced he was going to find a deal. He went out and found it and did that one. And then him and Sanjay kept on doing some deals. I was in the process of trying to close some other deals that we had started separately. And we all made it through the kind of tumbler dry and washer and everything. And, by July of 21, it was like, okay, we're, June or July, somewhere in there, it was like, okay, yes, we're all on board. And we all started, also, it's a bit of work, right? You start shutting down all of your other business interests. I had Serendipity Homes, I had Serendipity Investments, and, work towards, okay, I'm going to funnel everything now into massive. Let's do everything massive. So it takes a little time when you decide to merge even your solopreneur companies or your small companies together, and it takes a bit of it takes a lot of commitment, it takes faith to do all that, and not to get caught up too much in like who owns what investors, who owns this, who owns that. So we're very fortunate that we didn't end up, because I think if we'd spent a lot of time trying to figure all that out, we probably wouldn't have gotten to where we wouldn't have gotten to where we've gotten to, for sure. Because it's there is that whole thing. If you do want to figure out who you're working with and get to know people, but there was something that we all realized, that it was the right team, the right group, based on different skill sets and qualities and what we needed to grow as a company and to become a company instead of being solopreneurs in the process. So
it's tough. I mean, one thing what we don't talk about enough is a multifamily is a long game. It's not a quick game. And last 2-3 years ago, it happened because market gave it to you as a gift, but that's not the play. It's always been a long game, and that good and happiness happens when you exit an asset, and it's a long game. It's interesting that one of the things that we were talking about, what we see oftentimes when a team falls out, is that one of the reasons we said that the massive principals, they must be successful somewhere else, and they have to have some earning power somewhere else. So when we built a company, and a typical characteristic of a startup is, in the first 2-3 years, it's a cash negative. Then 3-4 years down the way, you start making it. So this is my fourth company, so I've seen a little bit. So one of our requirement was massive capital principals should not expect any money to be made for first 2 years or so, because we're gonna go build the company. It's gonna be upside down. We gotta make sure the others are okay, and that really played out well for us. If we would have said I have to make money, then I have to go for the act fee, then I have to make get my share, then I have to make a subpart decision under the name of doing deals. That alone gave us a lot more flexibility. We said we're gonna build a team, we're gonna reach out to everybody else. Now, asterisks, 100% of our team gave us a lot of faith, a lot of opportunities, right? That worked out well. But again, for us, our expectation is it's not a money-making first 2 years or so. So be cautious about it as you're gonna go. Now, I'm not saying that's the play for everybody. Everybody gets, should be getting it. But if you want to stay in the long term, have a long-term view, and be very picky about who you pick. The dominant part of the team that we see fall out is because of that. You do one deals because you want to do that particular deal. Then you figure out the relationship and the skill set and the time commitment is not a match. Then number 2 doesn't happen. Then you go back again, pop around for the same thing. So that's the issue that we see. It's pretty out there. You'll see it. So our massive philosophy is that if we don't see doing deal number 3, 4, 5 with you guys or with anybody, what's the point doing deal 1 and 2? Life is too short. We spend a lot of time with each other. We'd rather pick the right set of people, right? But it's fun. It is extremely fun. It is extremely addictive if you get the right team. They push each other.
Yeah, I was trying to answer. I'll let you try if you see Kara's question. It's kind of long and it's interesting. I was thinking about it a little bit. It's a good thing to answer though. Also, I don't know, some people may not have seen the poll. It should have just been running, but it's probably finished now. Some people also asked when was that deal? That deal was January of
2020,
20,
I think. Yeah, December 2020, 2021, I think, right?
no, December of, no, well, we actually put in the, I think we had the LOI accepted in January 7th
Okay, okay. That
of
makes sense, yeah.
22. I think we walked the property, or like,
I don't know. 2021. It's been 2 years now. I had the same struggle. Hold on. I got the dates.
January of 22, so it's still about
That's
the
right.
same difference.
Yeah. That's right.
All I know is my original first passive investment was with Sanjay 5 years ago, actually, this month. I made 2 investments with him when I started in passive real estate investing. Sanjay and I were trying to do a deal and we needed a big gun. So we talked to Shirar, and literally like in 15 minutes, we made a deal. And I hung up the phone and went, that was too easy. Is this guy for real? And called his partner AJ, who'd been a good friend of mine. And he's like, no, man. And then I known Mike for about 3 years. I started stalking them till they had to invite me in because I wouldn't go away. So that's how I got here.
I'm going through the questions. I think one question, Mike, do we answer the Kara's question about the syndication, the capital stack?
No, that's the one
Different
that was the one
Okay.
left. I'd love
Got it.
for you, Shirar.
Okay. Let me read that thing. So there was a question. It's a good question. Do you syndicate some of the capital stack before getting it under contract? What type of investors do you go? So as of now, we solved it 2 ways. So last year, majority of the assets that we bought, around 13-14% of the money came from the GP partners, and the rest we raised on the retail equity. So all LP investors, our average check size, Mike, correct me if I'm wrong, around almost 6 figures, right? $100,000 each, per check on average. That's what we did. Our philosophy has been we raise continuously, and we size the deals based on what the market is. Then we go. And yes, when we look at a deal, we look at our capacity, our friends, our colleagues' capacity, all the equity partners that we work with, and the pref, right? So we look at everything, as we underwrite a deal, that okay, the cheapest money we can get, which is the principal note, second cheapest we can get, which is the pref or institution, and the third one is the LP. And we run the economic model at the same time it shakes out to be, and then we go after it. We don't go after it just because it makes sense. I don't have the, we don't have the capacity to take it down. So we'll not do that because we need to increase the odds of success to do deals. So we focus on the deal that is within our wheelhouse. So when we underwrite it every single angle to make sure that it pans out. And if we fail, then that's fine. For the next deal, we go come back and solve it. So right now we have an in-house capital markets person. All he does manages the relationship. Sanjay is gonna lead the your private equity or the fund for the institutional. The institutional needs a certain kind of resume. And they, in a sense, they're gonna hire a third-party audit company and audit the GP company or the sponsoring company. Then they will say that company is investable. Then the institutional check will come in. So we are gearing up for that. But as of now, it's all retail, just like everybody else here. We'll stack up all the LP check and we're gonna go for it. That was the short answer, and then
That was it.
I think we got them all.
Ram asked me, when did I end up going to full-time RE? So I have been full-time RE since 2017. I always work more than 70, 80 hours a week. I tend to be a little efficient, but I have a team. I always looked at team first. So my full-time time commitment started 2017, but I left. I still work at Shell. I took a sabbatical 2021. I didn't go back after that. So December 31st, 2022. 2022 was my last date. Then I exited from there. My full commitment into real estate, full focus started 2 years ago. Before that, another 2.5 years I did it. But I always went with the team first. That was my recipe at Shell. It's not me. I want to manage only one person, Shariah, and rest is all team. So wherever I went in, it was team first. And what happened first year, your time is all over the place. You are getting banged. But year 2 and 3, you look pretty because everybody's struggling to look pretty. But my team does all the job, right? Oh, good question today.
Awesome. And
So-
again,
Hey, Tracy left you one last question, Schreier.
That's for you, Mike. You're the one saved it. Okay, this is
It
the
doesn't
question.
sound right if I tell it.
Julia,
all
don't
right.
skip my question.
Fine, Tracy. I'm not skipping your questions. My bad. Got it. So we didn't have a name, and we wanted to come up with something, right? Just like conventional. It's like me and Sanjay we're talking on the phone. I was like, look, it's been a little bit. We want to stick around. We want something named, and the name we wanted something cool, like something dumb, like lame. I was like, okay, we don't know what to do with it. We started with 4 partners: Shariar, Sanjay, Ajit, and Mike. Right? Ajit, he shifted. He's in the real estate a different way, right? So we was like, okay, everybody start with the last name. Let's put all 4 last names, right? Khan, Agarwal, Bailey, and we got Ajit's last name. The name became big. I was like, okay, it doesn't work. Let's take the abbreviation of the last names, first initial letter. It doesn't work. And I was like, okay, you know what? Let's take the first initials of first names. I was like, okay. Let's just put them up. I still remember I'm typing it up. We go Ajit A, Shariar S, Sanjay S. Oh, like, oh damn, it doesn't sound right. Like, we go throw Mike in there. So we put M in front of the ASS. All of a sudden it became mass, right? So okay, we can live with that. Then we thought, mass. How do I do it? Then I think Mike or Sanjay goes, put IVE in the back, put some oxygen in there. Massive became the name. And I was like, okay, Massive sounds pretty cool. It's kind of cheesy, but kind of went with it. It worked out. So Mike saved us. So Mike saved the whole thing. He became an ass to a Massive. So thanks, Mike. We appreciate you being there, buddy.
It was the M asset
That's
for the asses to be mass.
that's right.
Yeah.
Yes, everybody played a critical role to get where we at, including our names.
So is there any special meaning behind the name, or is just a combination of the name?
It's
That-
a combination of the name, and we wanted to be
Oh.
something cool. We said, hey, we don't know anything how that's gonna play out, but we're gonna go out the door fun, and we're gonna have stories to tell, right? And if you think about it, if you play whatever that you play, and if you don't have stories, we're not playing the game right. So ours was like, we hit the real estate, we have done it. Technically, you could, the pure definition of retirement, we're kind of sort of there. We're here to stay. We're gonna have fun. Whatever that we do, we gotta have fun with it, and that's how.
Yeah, and who would have ever? I mean, through all that, you would, just the massive. Who would have thought the massive capital, how well that works out, and so we also now have it trademarked as well, and we have our new domain coming up soon.
We hang out with some crazy
in the
people.
group too. Every other Tuesday. So I think it's next week. I believe you need to be joining that meetup on Tuesdays at 6.
Oh yeah,
And
Please,
then
yes.
don't forget that we meet every Wednesday at 6. Bring your friends. The whole idea is to create a community where we can learn, share, and grow together. That is that's a big part of what we do. We want to create a community that we engage with.
Trevor, what did you say is on Tuesdays?
Ladies, so sorry
Yeah.
you can't come, my friend.
Yeah, no,
But if
no,
you have
it's
a
okay.
wife,
No,
she
you
come, or a
can, but
girlfriend, or
you're gonna feel uncomfortable. And I always show up, and I feel uncomfortable. I was like, I'm out. It's really
Okay.
cool group though.
Yeah.
No worries.
Yeah, but
That-
on every other Tuesday night, they have that as well. So I've never been able to come either, but I've referred a lot of ladies who've always said that was amazing.